I'm Nisha Holla, chair of the YLC Special Interest Group on Tech and Startups, and I'll be moderating this panel. We're all here today because we've seen India become one of the world's most exciting fintech sandboxes. And at the root of this, of course, is the country's unique digital public goods model called India Stack, which is a public-private partnership-driven multi-platform framework and forms the basis of India's accelerated and really unprecedented digital and financial inclusion. Fintech startups, of course, have played a front and center role here in identifying market gaps, in building unique financial products for the Indian citizenry, serving needs during the pandemic, and really just expanding the ecosystem. So it is to no one's surprise that the fintech sector is among the country's fastest growing sectors in terms of number of startups in the sector, in terms of startup valuations, number of unicorns, and rapid consumer adoption. So indeed, these companies are among the best in the world at what they do. And so today we have invited four of these superstar founders to discuss India's fintech revolution. And I, for one, am incredibly excited to have this opportunity to just learn from them what's going on in this sector. So audience, Indian fintech is a gigantic topic. So we'll do our best to provide a broad analysis, and we'll do a few deep dives as time allows. So with that, our panelists today, Deena Jacob is co-founder and CFO of Open Financial Technologies. Welcome, Deena.
Thank you.
Vishal is co-founder and CEO of WeRize. Welcome, Vishal. Hi. Chaitra Chidanand is co-founder of Salt, or mysaltapp, as she calls it. Hi, Chaitra.
Hi.
And Deepak Abbot is co-founder of Indiagold. Welcome, Deepak.
Thank you.
So without further ado, we'll dive in, and I'll start with Deepak. Deepak, tell us, how has India's fintech landscape evolved over the last 5 years in your experience?
Well, I think it all started with very simple digital payments, and that too in the most prevalent use cases like mobile recharges and bill payments. If we go back to 2012-13 when Paytm was taking shape, I think we're looking for a use case which everyone would start with. So mobile recharge was that perfect product where you didn't need any physical product in hand, and you could actually sitting at home do your mobile recharges, because people used to go to shops and get the recharges done. So that was the starting of, I would say, the fintech revolution, because that really started accelerating the adoption of digital payment modes. People started paying using debit card, net banking. Obviously, UPI was not in the picture, but then UPI came in 2016, and then after Demon, the rise of UPI really took it to a completely different level, right? I mean, we all know what UPI has done to digital payments. Now, while that was happening, the other infrastructure was getting developed. There was verticalization happening in the consumer payment space, the business payment space, and then prepaid cards, BNPL. A lot of things got developed in the last 5 years, and as a result, today we have almost 200 million people who would be using digital payments, or using some of the financial products online. I mean, that's a big number considering 5 years ago this number would have been just 10 to 20 million, right? So we've really seen multi-fold increase, and the good part is that if you look at the overall internet population of India, we still got a long way to go. There are still 500 million people who are connected, and they are also upgrading to smartphones. So we'll see those 300 million people who yet not using payments would also come in online. Payments will always be the first use case, and then obviously they'll get into wealth management or other financial products, and everything else that fintech has to offer. So the headroom is really, really high. And considering there are newer products like in the lending space, account aggregator, open credit enablement network, all those things are taking shape, and I'm very confident that once they are adopted by fintechs and newer startups, we could see a UPI movement for lending as well, right? Because India is credit underserved. We all know, right? About of 550 million working age population, only about 150 million have access to organized credit. So we're still looking at a 3x more growth in this space. And even after we've reached I don't know, maybe in the next 3 years or 4 years, a stage where we're covering the entire India, there'll be a lot more innovation than happening on top of it, right? So I'm particularly very, very excited about all these opportunities that exist in fintech space, and we've seen what last 5 years have done. I think just see next 3 years are going to be much, much bigger than what we've seen in the last 5 years.
Great, thank you so much for that, Deepak. And so I'll go to Deena. Deena, with this rapid evolution in fintech, we are seeing the consumer and business ends converging in unprecedented ways. It's never happened before in India. So give us some context here, especially with your experience at Open.
Thanks, Nisha, and hi everyone. Excited to be on this discussion today. It's a very relevant question, and right to as an extension of what Deepak was just mentioning. Last half a decade, we have seen unprecedented rapid change in the entire fintech landscape, if you were to look at it, and that too driven by digital inclusion, digitization, and new ways in which the entire financial and the fund flows and the payments are being looked at too. So this is where we are in the what from our experience also what we have seen working very closely with the SMEs. If you look at it, even from a credit and an access to credit perspective, there is still anywhere between as we speak a 400 to a 600 billion, whichever the research you take, the kind of need which is unmet in terms of lending itself in the market for MSMEs, right? And the key reason also is that this MSMEs, which is going to be the driver for this entire economy and the growth that we are looking at in the next half a decade, and for the 5 trillion, I mean the economy that the boost we are looking at. The problem is
We lost her.
I think so. Deena?
Yeah, she's got a bad connection.
Okay, I will go down to Vishal and then we'll come back to Deena. Vishal, tell us about what you're calling the massive $1 trillion opportunity in Indian fintech.
So, overall, we divide India into primarily 3 income buckets, and they also align with the geographies also, right? So at the top, you have the millennial Gen Z, white-collared taxpayers, 5 crore taxpayers in India and their family members. So 10% of India's population, like 15 crore people, if you include the family members, right? That is like a Europe within India types thing, right? There is a Dubai within India also, right? Like rich people like Deepak, maybe, right? So yeah, or now Deena and all, now that they're all unicorn. But yeah, folks like us, to some extent, the upper middle class that's the one segment, the European country within India. And then you have this massive middle class, primarily living in smaller cities. That's the middle and the lower middle class. And then you predominantly have the poor people living in the below poverty line, rural, primary agri-based and all that, right? So these 3 are the massive, pools in themselves, and each one of them have very different needs, and each one of them have their own underserved population, right? And like, for example, in the top of the pyramid, like the kind of business the Salt is building for women who are underserved while they have money. They may be a millennial Gen Z, but they still have money, so there is an opportunity there. Our segment is someone that is not really catered to by the private sector banks or insurance companies, or majority of the fintechs also end up going after the same millennial Gen Z. In our segment, they don't have credit cards, they don't have unsecured loans, they don't have insurance, they don't have equity investments, right? So that is a huge underserved population. And obviously the last one, which is like really poor people, there is some access with money lenders or a little bit of insurance that the government provide, but all across there is massive underserved. So it's an opportunity worth trillions of dollars, and like there can be like hundreds of entrepreneurs that can build businesses, pick each of these pockets and build massive businesses in each one of these. So that's the way we see the opportunity in front of us. It's obviously very, very exciting.
Yeah, just to add to what Vishal said, earlier,
ahead,
every revolution starts with, horizontal penetration. So Paytms and all those things started now. It's now going into vertical, and even in verticalization, we are going into each and every aspect of financial services, then building products, which is like, Vishal said, is a $1 trillion opportunity. And in every verticalized product, we can see, at least 20 or 30 new startups building exciting products. So that's the kind of opportunity we're looking at.
And this is not a winner take all market, right? Like it's not a winner take all market. Like it's like a market that can support like, maybe 100 unicorns, right, over the next 10 years. So
that's the dream. Awesome.
Exactly.
Deena, we'll quickly come back to you. Please go ahead.
I think our internet has some issues. It's frozen again.
Yeah, it's frozen again. Okay. All right. Chaitra, now speaking of underserved markets, you have identified a severe market gap in financial products for women. So how are you approaching this at Salt?
I think what Deepak said nicely segues into this question, right? Because first you go horizontal and then you go deeper. And part of going deep is also going to specific segments. So one of the things we did early on at Salt, and this kind of comes from my own experience, during my previous startup, which was simple, where true to its name, it was a very simple product, right? And as a product person, I had assumed until then that you solve for ease, you solve for adoption. But I was really surprised that even after 4.5 years of our existence, only 10% of our customers were women. Then that got me talking to a few of my other entrepreneur friends in different verticals. And I realized that when companies build for all, effectively by default, you end up building for the default human who is the male. And what that means is that that's what kind of drives the early adoption, and lazy explanations are taken, right? The most common lazy explanation is, oh, there is, it's complex. Women don't like complex things. Or like in gambling, they use this things that women play games of chance and men play games of strategy. But that does not explain why suddenly when fantasy football and all these online gambling has exploded, you suddenly see a 50-50 participation of men and women, right? It's because that's when you realize it's a design problem. The casino, the physical casino, is designed to be not so friendly to a woman. But when you take the same game to wherever she lives, where she can play in the privacy of her home, then suddenly participation increases, and the same person who was thought to be a player of chance, games of chance, starts playing games of strategy and is actually very, very good at it. And there's so much research that's come out in the last few years about women in finance, whether women in personal finance or women in industrial finance, as I like to call it, which are hedge fund managers or investment bankers, about how they are better than their male counterparts in terms of the returns that they produce, in terms of just overall being good at what they do, right? So then naturally the question for me when I was leaving Simple and thinking about what next was, hey, is this really, like in personal finance or in actually individuals, is this really an intent problem, or is there something more going on here? So we've spoken to more than 500 women so far, and these are really like in-person, one-on-one conversations. And the overwhelming realization is that it's not an intent problem. And in fact, it's a latent intent problem. And it's been misdiagnosed as a knowledge problem. Because, the industrialization of finance, which has happened in the last few decades, that's kind of led to this perpetuation of this belief that managing money is extremely serious, managing it is very complex, and people have started believing it. But if you really take a step back and think about it, the bread and butter of managing your money is actually pretty standard, right? There is like, there is not that much complexity in it. You just have to understand a few concepts, and it's more like what Warren Buffett's partner, Charlie Munger, says, right? It's about not doing stupid things. And one of the stupidest things to do when it comes to your own money is to just not do anything with it. So, and I think that's what most of us are guilty of, because when it's kind of like the analogy I use is you come all the way, you want to learn how to swim. You are afraid of the water because it's something you've not entered before, and you're scared you may drown. But really what you're looking at is, you're at a swimming pool. You don't have to go to the 10 feet deep end directly, right? Though actually swimmers say that it's easier to swim in deeper waters than it's in shallow waters. So it's the diagnosis of the problem was that this is a design problem. And the way to approach it would, and also a marketing and distribution problem. So the approach that we are taking here really is to get people into that kiddie pool, get them comfortable with the water, get them comfortable with actually taking small actions. Meaning if you have 50,000 rupees to invest, start with 5,000. If you have 5,000, start with 500, but just get started. And we have seen tremendous success in the pilots that we have done so far, where literally a group of people, women, in their 30s, who we gave them a very simple Excel trading tool, which was built on Google Sheets, integrated with Google APIs. And within a week, they went from, stock market is too complex to sort of opening their Demat accounts and saying that, okay, I think I'm going to go and pick stocks. And to the point where we just got alarmed. We were like, hold on, don't rush. And in fact, in one of our Twitter spaces, one of the guests actually said that it sounds like these days women, there's so much chatter around crypto. So it feels like women are going to leapfrog from FDs to crypto directly, right? So I guess the summary is really, I think the approach that we are taking is action oriented to get people started, because that's really the question that we heard resonate across these women that we have spoken to. Get me started. Am I doing the right things? And, what are some of the people who are already started investing are like, my RM is telling me to do these things, or my husband is telling me these things. How do I know that these are the right things? So basically, help me build my money muscle is how I put it, right? And it's about taking those small actions and getting them started on this piece.
Right. That's very encouraging. Thanks, Chaitra. We'll go back to Deena.
To complete this for sure. So yeah, on the convergence of the personal and the business, the point and the interesting part to look at is that one, from an entrepreneur, when he is doing, especially from a sole prop or the individual level, their personal and the business side cannot be separated out. And earlier in silos, when we were looking at separately, even underwriting the business as an individual, or even for that matter, looking at the money flow which is happening, all of them were siloed earlier. Now is a very interesting case wherein, not worrying about the end use case, not worrying about how he is on the personal front and on the business front, how we can put it together. This is powerfully important, since we have the records and the digitization as a person, as an individual, as an entrepreneur, we are able to underwrite them in a 360-degree manner. And the other interesting aspect also is that with all the inclusions, intelligent bundles which are happening, I would call this as an intelligent bundle, because earlier it was extremely siloed, which you can't connect them. The use case is the same. What you have to put it into business is the same. It's the same person. Now we see with digitization and data aggregation, a lot of these things are coming to be a reality. Wherein, for example, India being a goal-led culture, right? How can you take a gold loan instead of treating it as a personal loan? Most of the times they use it into business, but how can it converge? Today, we have a way in which we can converge both the cash flows and look at what is the need and then provide it for them. The other aspect is in the wealth side. If they have on a personal side, or otherwise, if you have wealth, how can that be a collateral for you to put it back into the business without breaking it? So that both the sides can be balanced very well, because from a business perspective, the requirements are different. The other interesting aspect is like how the ecosystem is coming together, especially when we look at BNPL, the new instruments which are coming together, from business going all the way to the consumer, right? The same businesses, the finance and the entire inclusion and the payments is becoming an embedded feature rather than that being a completely separate stack altogether. So these are the areas wherein I see personal and the business part of it, which is converging, which used to be extreme silos in the earlier times. And when you see this kind of intelligent bundles happening, which is where I believe, as Vishal was also mentioning, once you see that bigger theme happening, then it becomes a collaboration and spread out into taking on from that. Taking wings from there, going deeper into each segment. Because this I see as a huge theme which is emerging right now. And then we will see different interesting businesses which right from the entire stack all the way to breaking silos and going all the way to the end consumer, which forms as a single thread which will be coming in future.
Wonderful. Thanks, Deena. So Vishal, at WeRize, you have also identified a target group that is underserved, and you gave us a little bit of context in your earlier answer. But which section of India is this? You've told us, but we'd like to know specifically what WeRize is doing to cater to them and how you're thinking about adoption there.
Sure. So we are out of the three segments, we go after the bang in the middle, your middle class and lower middle class living in smaller cities, Ludhiana, Amritsar, or
right.
I think majority of the people here. So there's a very interesting phenomena. What happens is people living in small cities, when they get good education, they always move to larger cities.
That's
right. So the cream always moves to the top cities, right? Always, right? And the smaller cities, they have typically your middle class people whose income does not exponentially increases. So all your corporate and MNC employees and all, they live in the larger cities. And let's say somebody working as a teacher in a smaller city, right? She always stays there. right? There could be a railway employee. He will always stay, like he start there and end up there, right? There are a lot of these FMCG distribution employees working for, let's say, a distribution of a FMCG, or this medical representative selling for a pharma company earning 15,000-20,000 bucks. This middle class, lower middle class living in smaller cities, they end up staying in those cities. So that's the segment that we are going after, the real middle class of India living in smaller cities. Now, the behavior of these people is that they don't get access to HDFC or these Bajaj and all these guys. They're all HDFCs and Bajaj of the world are still going after the upper income guys in the larger cities. If you are a lower middle class guy earning 15,000 in smaller cities, these banks don't even want you on their platform, right? So this is the segment of PSUs, your SBI, your Canara Bank, and those kind of UCO Bank, and the regional cooperative banks.
Right.
Now these banks don't do much retail business beyond opening bank accounts. So they open a bank account, but they don't give you insurance. They don't sell you credit cards. They don't give you unsecured loans. Right. So their business model is take money from middle class and give to large corporates at the cheapest possible, price points. Right. So that is the segment that we are going after, which is neither rich enough for your private sector banks and not poor enough for the government that you fall into your microfinance, segment, which is the below poverty line rural segment. Right. So ours are the guys in the middle. And for this segment, what we do is we do a full stack approach where we design the products for them across lending, insurance, and savings. And then we have do our own risk management, obviously, which means for the loans and all underwriting. And the interesting part of our business is our distribution. So our customers are not somebody that have enough confidence on themselves. While they may be a smartphone user, they may be using WhatsApp, they do not have confidence in themselves to go and buy complicated financial products on their own. So they need guidance. And that's where LIC really thrives. So LIC has near 100% penetration in our segment because they created a network of trust of these freelancers across India. So essentially what we do is tap onto these LIC agents. And we have a distribution platform where we are able to tap onto these LIC agents, and similar, like there are India Post Office savings scheme agents also, very popular in smaller cities. So we bring these kind of freelancer agents and bring the existing network of trust in smaller cities, and we sell our products to them. Now, the very interesting thing about us versus anybody else is LIC, or there are other companies that do this agent or freelancer model, is that we do not have any feet on street in any of the cities. So we are able to manage these freelancers right now in 1,000+ cities with no feet on street of our own, no branches of our own. So that makes the unit economics of the model really solid, right? And we are happy to say that we are actually near about profitable. We'll be profitable like while growing like really, really fast.
Congratulations.
We'll be profitable. I think in the next 3 to 4 months, we've been like earning cash, generating cash every month. Primarily because we save all that. We don't do any Facebook, we don't do Google, right? There is no such marketing cost, right? And even to acquire these freelancers, it's all word of mouth. So they make a lot of money on our platform. So they, people come to know that the one LIC agent talked to the other one, and the acquisition of these freelancers is word of mouth, right? And the management of these freelancers is only through the platform. So obviously we are left with quite a lot of money because there is no marketing cost, and our customers love it because they get their network of trust. They already trust this person, right, with their savings, etc., through LIC. So yeah, so it's thankfully working really well for us. It's a different take that we have. Our approach is slightly different from the digital first approach of majority of the fintechs. But the problem in our thesis is if you want to do pure digital, especially for complicated financial services products, you will end up working with the millennial Gen Z primarily only.
Yeah.
If you really want to go to this segment, then you have to have digital.
Yeah, I want to add to what Vishal is saying, and that has been the observation even for us with women. And we've seen that very clearly. We launched this. I think one part we are seeing is that we need a perfect dance between non-transactional and transactional, like transactional being able to purchase a financial service, like basically being able to invest in a mutual fund or buy into an insurance or buy digital gold or any other asset. And the non-transactional, which came out very strongly in this segment, was the need for, people who are like, I don't know what is my savings potential. Like
Mm-hmm.
how much is coming in, how much is going out? Am I doing enough? This constant question of, am I doing enough? Am I doing right? So that's what we call as the non-transactional, which is like track your cash flows, do it in a as simple way as possible. So one of the products we've launched is basically a NLP based budgeting tool, where you can literally, as easy as sending a WhatsApp message, you can start tracking your expenses, your income, especially for women, because a huge segment of women are freelancers. And especially during COVID, many of them have become these home business owners, right?
Yeah.
And so they're like mini micro entrepreneurs or nano entrepreneurs in their own right. And for them, tracking these inflows and outflows is it, and consolidating them in one place and being able to tag it and configure it so that it almost becomes like their flavor. They are creating their own money map, right? That is very essential. And being able to capture their, I think in the segment that we went after, one very surprising realization was, out of those 500 people that I said we spoke to, except I think a single digit one of them, everybody overwhelmingly said, this is the first time I'm talking about money to somebody else, because money feels like a taboo topic, right? Good girls don't talk about money, or you either, I feel if I talk about money, people will know that either I earn too much or I earn too less. Either ways, there's judgment associated with it. So I think untabooing it is, so those two aspects of money mapping and untabooing is the non-transactional pieces. We realize that without those, building a transactional layer alone is essentially not going to solve the problem. So the two coming together, it's kind of, borrowing from what Vishal and Deena were saying. I think that is the approach that we are seeing working for our audience.
Awesome. Thanks, Chaitra. So India has always been one of the world's largest, if not largest, gold economies, right? And Deepak's team at Indiagold is exploring some fascinating ways of deriving value creation over this. So tell us your experience, Deepak.
So, when we looked at the market 2 years back, when we were looking at, building Indiagold, one thing we realized that, we love gold, right? And I think that's very, very clear, because we have the largest private reserves of gold in the world. So just to give you some numbers, India has about 25,000 tons, officially 25,000 tons of gold, which is worth $1.5 trillion, right? So that's a huge amount of gold. And just
half
about
our economy.
And just 700 tons is with RBI. So 700 tons is with RBI, 4,000 tons is with temples. And that obviously the gold that came to temples came through people only who donated. And then about 3,000 tons with institutions. So we still have about 20,000 tons lying with Indian households. We call it internally a dead asset because, it's the second largest import item on India's bill, right? After fuel, gold is the second largest item. And unlike fuel, which drives the economy, gold, after it gets converted into jewelry, doesn't do much, right? We wear jewelry maybe 4 or 5 times in a year, maybe 10 times in a year. The rest of the time is just lying. So it becomes a dead asset because it's not adding value to the economy back. Having said that, when we looked at the credit needs of India, we realized that literally everyone needs credit, right? Someone needs for their personal needs and emergency, for business, and so on and so forth. So if credit need is with everyone, but when they go to organized sectors, to banks and NBFCs, not all of them have regular incomes. Not all of them can prove credit worthiness. So they find it challenging to get credit, right? So that's the reason why India has a very large unorganized lending market, and they lend at obnoxious rates, right? They can go from as low as 50% rate of interest to maybe 365% rate of interest. They end up taking loans at 1% a day, right? That's, and I'm even if you exclude that, even with organized banks and NBFCs, you end up taking credit 14, 15, 16% if your credit rating is not good, right? So we said, okay, why credit has to be that expensive in India? The reason being that it's difficult to underwrite most of the India, right? Like I said, very few salaried. Most people are self-employed. Most people are self-employed non-professionals, right? So their income is irregular. So we said, okay, there has to be some better way to give access, cheaper credit to them. So that's when we looked at gold, because gold is lying in their home. But we said, there are companies like Muthoot, Manappuram, or all banks which are offering gold loans for the last 80 years. What are they doing that, what can we do differently that they are not doing? Then we realized that, gold loans so far has been pitched as the last resort when it comes to taking credit, right? People think of it like the sign of failure, right? Gold loan is not a comfortable product in India. Most households will not even think about taking loan against gold if they have some credit need. First, they'll explore all the other options. They might even ask their friends, families they don't get from banks. Only if they feel that nothing else is working, they go out and take gold loan. And that is where I think the problem lies, because you don't need to make it look like a product which is your last resort. It's not a sign of failure. It needs to be pitched as a financially prudent product. So how I'm saying that, for example, today, Indiagold offers gold loan at about 7% per annum, right? I mean, that's the cheapest loan that you can get after home loan. And this can be, made available to you without any credit history, without any credit score, no documentation needed, right? So we're trying to pitch it as a product where you have easy access to credit because you have some gold lying in your locker. So instead of the way to communicate is that this gold which is lying in your locker, you just need to transfer the location of that gold to our locker, and you have access to credit. And if whenever you need that for some occasion, you just pay off your loan and take it back. And unlike other loans in India, where you have to pay monthly EMI, gold loans mostly don't even have monthly EMIs. So it's a very, very friendly product for people who need working capital, who don't have regular income. So we thought if we can productize this better, we can make it more transparent, we can make it convenient for people to take it, can offer doorstep services. They don't need to go to any branch. Just by the click of a button, they can look at all the products, and then we have multiple banks in the back end who can provide credit to them. So that's what we went into the market, and we realized that while we are mostly in tier 1 cities, we realized that even in tier 1 there are a lot of Indias, right? There are a lot of segments in tier 1, and you have all income groups, and there are all kinds of people. You have people with like I said, very high credit score, people who are top 1%, top 5%. But then the majority of the population, even in tier 1 cities, is still underserved when it comes to formal credit. So we're going after them. So we're going to be in tier 1 cities at least for next 1 year, 1.5 years. Once we captured the middle class or the lower middle class in tier 1, we look at tier 2 and tier 3. But like I said, even in bigger cities, there is enough opportunity to build a cheaper and a transparent credit product. So that's what I think keeps us excited. We believe that some of the credit problem can be solved by this asset that lies in people's home already.
Very exciting, Deepak. Thank you. Deena, over to you. See, MSMEs have been the backbone of the Indian industry for decades, but they've always had trouble, securing capital. So the last decade, companies like Open have made this access far easier than ever before. So what have you done at Open to enable this? And what more can India do to improve access and allow for easier functioning of MSMEs?
Nisha, to the audience also, what we believe is that the access to capital historically has been a challenge or a hindrance for MSMEs because of the fact that there are no ways in which data can be put together for them, for anybody to underwrite them. It has been predominantly cash economy. And from there also, depending on where you are and what kind of business you are in, quite a lot of cash flow is happening outside of, especially particularly in cash, and they are not structured, recorded somewhere in a structured manner for anybody to look at and say, this is what they are worth, or for them to be underwritten. So this is where we thought, and there were two problems when we started off the solution that we have taken to MSMEs also. We have started off from two different angles wherein we found the problem to be. One is on the lending access, and second was that was stemming from the fact that which was actually hindering the growth of their business and the way in which they can actually be efficient in the market. And that was stemming from the fact that the structured data is not available. So if you look at a product today, we function as a single business operating system, wherein a banking, payments, accounting, and compliance, all of them are put together on the same platform, and also there are like growth tools. Why the thought behind this also was that if you're able to look at if you're able to manage all your cash flows as well as the related business transactional deal which is happening. For example, for any cash flow to happen, there has to be a business which is happening between two people, whether it is from a consumer side or from a business side. An invoice which goes, or probably a bill that you get, is a sign of what is a deal has happened, and then the money flow happens, which is where banking and your business cannot be segregated. And that's what we have put it together. Now, since that is happening in fully digital, every digital mode of moving money is available on the platform in a single sign-on. Today, even without they realizing, whether they don't have to be an expert in a debit or a credit, because an average entrepreneur, you cannot expect them to understand the entire nitty-gritties of how this can be recorded, to the point that Chaitra was also making on the personal side, right? How do you, from a very quick perspective, understand what is your real cash flow? What are you making the money on? Who paid you? Who didn't pay you? So these are the things which we are putting to the infrastructure. And from a customer's perspective, what they get is that entire banking, entire business, and your interaction with the customer, and your decision making reports and everything which is required, whether it is for statutory or for your own reason in terms of acting upon, you get it in one shot. And this is how beautifully, from a system perspective also, if you look at the OCAN or the account aggregator, all of them are intended, along with the digitization and the digital inclusion, is intended to bring together this data, so that anybody who does business and who does in the formal manner, or rather, if the digital flow is going or enabling them in a very easy manner, how can you go ahead and underwrite them based on what they are and what they do? So very interesting thing. I mean, when we were looking at one of the pushcart ice cream vendors, when we were speaking to, when we were making one of our products, we thought, they're like, much lower. Probably you would pass them off as somebody who would have a 3,000, 4,000 kind of credit, even if you can structure everything. But to our surprise, a monthly revenue he makes around 1.5 lakhs, and right outside of a tech park. So it's not so intuitive when you think about it, right? But this is the real India. I mean, business happens there. Unfortunately, when they approach a bank or when they approach somewhere, they're not in a position to show that I am making so much, because it's half will be in cash, half will be in UPI, half will be in his account, half will be somewhere else. So this is the problem we are solving for. First, giving them, enabling them to put together what really they are doing, enabling them to even, enhance their business, even for that matter, even we as customers, right? When we go somewhere and today, if UPI is not available, most of the times we might not be having cash, and we might be looking for options where all of these are available, for example. So we're enabling them, first of all, to get into that formal, or rather, demand generation, also making it possible. And in the meantime, while they're using these kind of tools, they shouldn't be thinking of the complications of how this has to be put together. We just make an automated way in which that can be put together in a very structured manner, presented anywhere. And this makes it possible for us to, for example, when you look at even a credit access, right? Technically speaking, a credit card shouldn't be separated from OD line or something which you have to use, because you are the same user and you are the same person for whom the limit is given. It shouldn't be two different instruments. So whether you're going to a place where a card is accepted, or whether you are making a payment to a vendor for whom only a bank transfer is available, you as a business should have availability, accessibility for both. So these are the kind of things which you're putting together, right from, underwriting at the aggregated, the business or a sole prop, or whoever be the person, right? The entire, whether it's a company or a sole prop, from all kind of cash flows they are having, underwriting them from that perspective, to making products like crafting it in the same experience, like whether it's an instant settlement if you are collecting it through a PG, or whether you have if you are using a POS, how do you have again an instant settlement, so that you don't have access on the day one or the other day zero and doesn't pay for anything outside. And then you would be having, revenue-based financing for probably, when you are looking at high growth businesses. So there are a whole lot of different options that you are putting in, not only the way in which historical transactions alone, but your potential as a whole. How do you look at it going forward in craft products? And from there, again, the fungible way in which, it can be used through a card or through a bank transfer. So from a customer's perspective, when you look at it, first of all, organize your data, help you get into the formal system wherein people can underwrite, see the data, underwrite you, and have products which gives you a seamless experience in terms of whenever you need, in whichever mode, this is available for you, not only or based on historical, but going forward, which is exactly we're putting together on the same platform, putting together things like, it could be like, not only the unsecured, a secured part of whether how, to Deepak's point, I mean, beautiful way in which Indian economy, this is a need of the hour for that matter, wherein, gold can be a collateral for that instead of that being a personal. So his cost of borrowing itself comes down overall. So this is the overall way in which we are going into the market and enabling, I would say that we are enabling SMEs to technically look at their business, how they can unlock the true potential. Because most of the times what you see is that the money, the hindrance or rather access to the capital has always been a blocker for them. And moreover, when they have surplus capital also, they have no clue what to do with it, because it's extremely difficult or extremely complex for them to think of how to optimize for that money. So this is where an operating system like ours, we also give them the view into what is the predictive cash flow. If these are the kind of sales that you do, these are the kind of receivables you have, or these are payables, at what point you will have what kind of. There are predictive cash flows, and so ultimately you let them record everything, predict what you would be, look at whether you have a deficit or a surplus, and help them manage that. So that's the 2-3 different ways in which the businesses would have to have visibility if they were to optimize completely what they are doing. And that's what we are into. And today, as we see in the last almost 85% of the pin codes of India we cover, which means people are generally understanding. I mean, the good part is that not only the internet penetration, but we see a whole lot of businesses understanding what's happening on the UPI, thanks to the UPI and thanks to various other things, which has been the entire stack which has been working towards the digital inclusion. We see a lot of people who are understanding the need of this and adopting this, in fact, in the SME sector.
Very detailed. Thanks, Deena. Chaitra, you're talking about customizing products for different market segments, right? So how do you see this naturally evolve into personalization of financial products for every person's unique needs, which I think is going to be really the next thing in the fintech sector?
Yeah. So I see personalization happening in two ways, right? One is personalization from a recommendation perspective, meaning everybody has different needs. And today, a lot of answers given to them are very boilerplate. So and there are two parts to it, right? One is what are the products available? And second is how has historically been the cash flow journeys because of which recommendations have emerged the way they are. I'll give you an example of what I mean. So I think so far now, if you go to any financial advisor in a bank or anywhere else, the advice given to you is based on a template human who starts working, usually a man who starts working at the age of 22. And then, at the age of around 30, he gets married, somewhere around 35, probably has kids, wants a car, wants a house, kids go to college when he's close to 50, and then retires at 60, right? And throughout this person has a continuously linearly increasing sort of income stream. Now, all the financial suggestions, whether it is, what kinds of instruments to invest money in, even the design of the products, right? The whole EMI-based lending, the not being able to take breaks in your repayment journey as a borrower, the insurance products where monthly premiums are the only way to go, and any one premium that you miss, basically those regularized premiums, again, not being able to take a break in that premium. I think that's what I mean by both recommendations as well as the product design itself has been done for that kind of a user group. And that is one of the reasons women have not been serviced by that, because women tend to historically, for personal reasons, end up taking career breaks, either because they get married, they switch locations, they have children, they have parents to care for. And so therefore, you don't have lending products or insurance products that are sold to them or built for them because of that irregularity. But today, one of the things that we are seeing, and we are seeing that increasingly in Gen Z, right? Both men and women are making conscious choices about their career, which lead to irregular income streams. The people are choosing to stop working, taking a sabbatical, going and traveling the world, or jumping into entrepreneurship where suddenly from a high salary, they go to a very, very low salary. Now, that does not mean that this person is not going to be capable of paying back a loan or paying a certain insurance premium. It just requires a slightly different design of the product. I'll give you an example of one product that we actually found in the insurance sector, which is quite interesting. It's called a Khata product, Khata insurance, they call it. And the Khata insurance is nothing but a layered single premium product. So it does not penalize you for missing a particular month. There is no pressure on you that either quarterly or monthly or annually, I need to pay this premium, right? Whenever I have that money, I go buy into that particular plan. It works like a single premium product and it gets layered. Now we asked, so India First is the company that has this product, and we were speaking to Vinita, who runs this company, and she told us that one of the main reasons that this is not sold is because on every installment or every single premium product, the agent makes only 2%. Now compare that to these other insurance products where you make 20% or 30% upfront.
Right.
So the incentives are stacked such that, these products are not sold, but the other ones are sold. But increasingly the customer is becoming aware, right? That one, they're not, their own income streams are not going to be regular. Second is they're becoming aware that, hey, I don't want to get stuck. Is this really a good option for me or not? So I think these two pieces, both like Deena was saying, having a certain degree of awareness of the person's money context today, and based on that being able to predict what might be their needs, and therefore almost work a little more like a Netflix recommendation engine as opposed to, a templatized boilerplate checkbox based, rule-based engine, right? I think that is one on the recommendation advisory side, and also on the product innovation itself. Even like look at health insurance, right? There are so many health insurances that do not cater to maternity. There are a lot of needs that are unmet because awareness was not present, because that was not the core consumer. So I think on both sides, product innovation as well as prediction and advisory, the demand is there. The change is only going to become more and more acute. So either the industry catches up, or they kind of get sidestepped by players who do innovate and invent for this new market. And that's where the gender gaps are also narrowing. So that's why for Salt, one of the things we say is that we are distributing women first, but we are inclusive of men. Like we kind of joke about it because inclusion is usually used in women's context, but we say that we are inclusive of men. And we do see 30 to 40% of our audience inherently being men, because intuition is something that they also crave, right? They also want to be able to understand and do things from a point of understanding as opposed to from a point of, obscurity or just winging it.
Right. Thanks, Chaitra. So with this, we've finished the panel questions and we'll come to audience questions. Some of you have already given us your questions, and I'll be coming to that next. If audience has any more questions, you all can enter it in the chat box and we'll come to it as time takes us. We're at 6:45 now. We'll spend about 15 minutes on audience questions and then close. So these questions are open to all of our panelists. The first one is, now the common denominator with what all of you all spoke about are the technology platforms, right? So how do you see the evolution of the FinTech sector with leaps in technology, in data analytics, and artificial intelligence, machine learning, cryptocurrency, blockchain, and so on? No takers?
I'll volunteer.
Technology platforms. Thanks, Vishal. Go ahead.
So our take is, like slightly anti-technology. So it's like you cannot be, when you talk about financial products, like beyond those top 5-6 crore millennial Gen Z, if you like with those guys, you can be a pure tech platform, right? Like you can do all the machine learning you want to, or all the recommendations and all, because you're for millennial Gen Z globally, right? Not just India. The way financial product distribution is, one is like creation of product, and second, more importantly, distribution, right? You may have a great product, but if you're not able to sell them, it does not help, right? So for what the phenomena that we are seeing in India, and this is like all across, you look at even commerce and not just financial services, beyond those 5-6 crore millennial Gen Z tax-paying population, right? Which craves for a DIY app, right? They actually hate these agents or anybody recommending them anything, right? They actually hate that experience that why somebody is just pushing this. Let me make the decision for myself, right? The other half of India, like the next, at least like the next 30-40 crore people, like beyond that, they don't have much money to do anything beyond a point. So at least the middle class of India, they have a different behavior. They do not trust themselves to take the right decisions for themselves, for their own. So that's why they want to talk to somebody they trust. And that's why LIC sells, right? It's not the greatest of the products, but it does really well because there is an agent that is pushing that product. And it's not a bad product either. It's not like, this is going to kill you or something or like bankrupt you. right? So it's a product that has done decently well, right? And it's a product that it sells because there is a network of trust, right? That is the focus that we have. But where digital comes in our particular case is all of these freelancers are managed through the digital platform, right? So that we do not have an LIC kind of workforce to manage them. So it's a phygital. If you want to do financial inclusion for the India 2, not the India 1, you have to go phygital. That's the right way where it will work, because we have seen the digital CAC does not work in smaller cities. The conversions are too low for complicated products. People just drop off very quickly because they don't understand. So you can do pure digital for stuff like payments, where the guy does not have to do much, right? It's like I'm paying this guy or getting my payment, right? All that is fine. The guy can do WhatsApp, TikTok, but ask him to take out 20% of his salary, right? Or like take a complicated product, they would want to talk to somebody. And even beyond financial services, I think social commerce companies like Nisha and all these companies actually are primarily focusing on stuff like this, right? Like in small cities, it's not just fintech, right? Like these women are selling saris and chappals and all this, because these customers cannot go to an Amazon and do their own research, and they're used to talking to somebody, going to a shop,
Right.
and
Right.
and then the shopkeeper recommends, madam, you buy this, that kind of a stuff, right? This is a great design, this will suit you. That's what Nisha has essentially capitalized on, right? Like
That's
letting
right.
these housewives become like seller primarily of softline category. And similar concept we are going to see in financial is like way more complicated products, right? Like right. So that's the core thesis we bring in. So you have to. India is a very unique country. People like compare, okay, this of in US this worked, China this worked. What we forget is that, like with 4 times as many people, our GDP is 1/10 of those countries, right? Or with China, 1/5 of those countries, right? So we're still a very poor nation, and in the evolution, we are maybe a couple of decades away from those countries, maybe like 100 years away from reaching those kind of income levels. So we have to, if you want to go beyond the millennial Gen Z or the Europe within India, doing it only through tech platforms will not work. You can apply all the machine learning you want to, but things will not really sell beyond a point.
There's one more aspect to technology. It brings in operational efficiency. So, for example, we talk about UPI doing 2 billion merchant transactions.
That's
now,
right.
how are those 2 billion transactions possible? Because there were millions of merchants who had those QR pasted, right? Well, India is still not a do-it-yourself, like Vishal said. So there were people on street from Paytm, Google Pay, Phone Pay, all these companies, Bharat Pay. They actually went out in thousands and installed those QR, right? So India has those operational challenges, but technology helps bring the efficiency in it. That how can you do instead of maybe 100 shops a day manually, doing the QR, then activating the merchant, doing the KYC, and doing the onboarding. How can you make it more seamless so that instead of doing 100, you can do 1,000 shops a day? And similarly at Indiagold, what we are looking at, we're an industry which is well established, right? We don't need to create a product market fit. The only thing that we need to bring in is efficiency through our technology. And how do we do that? Now, for me, because we don't have any branches, we are a doorstep model. For me, the most important unit is the person who does the loan, right? So now, how can I ensure that this person can do, instead of 1 loan a day, maybe 2 or 3 or 4 loans a day? And that's all about using tech at the scheduling level, at the customer matching level, the entire onboarding of the customer, the KYC. So technology plays in the background, while in the front end it still is as simple as someone calling us and saying, "Oh, I want a loan. Can you send someone home?" Right? So there's no technology there, but the way we bring in the efficiency, because when we look at our business, the key metrics that we've learned from the publicly listed companies who are in the same domain, they all talk about their operational efficiency, right? And they have a percentage number which they very proudly quote, OPEX to AUM they call. We are 1 year into the business and we already beat their OPEX to AUM, and that's what technology does, right? So I just wanted to add that point as well.
Great point. So it's very similar story in our case, right? Like our model is similar to LIC, but without any of our employees in these cities to manage these freelancers, right? So what we do is manage all of these freelancers from the platform without opening branches in any of the cities. And that brings like huge amount of operational efficiencies versus like if you look at the DHRP of LIC or Fino Bank, right, who has this big banking correspondent network, their biggest cost is the field teams that they have or the branches that they have. We don't have any, right? Like we are present in 1,000+ cities. We have sold products in 1,000+ cities. And we have no branches, and we are able to use technology, as rightly Deepak mentioned, to our advantage. And that's where machine learning comes, right? Like how do you machine learning and data science to obviously underwrite these customers when the data does come, but like to manage these freelancers, thousands of them at scale, giving them the recommendations and like pushing them the relevant training material. Like imagine if you have, let's say, given 10 loans and 10 out of 10 are actually not fit with our credit or sourcing criteria. So training material will go automatically to the customer based on the patterns and machine learning, etc. That okay, you are sourcing the wrong kind of customers in first place, right? So that's where the tech becomes an enabler, but tech cannot become like end to itself, right? Tech is not the a lot of my friends who have been in different companies and all are entrepreneurs, right? They fall into this trap that they try to build a great tech solution, right, and all the jazzy names which does not solve customers' problem, and they end up not achieving anything, right? So that is a very, very pertinent point here. So all this tech is very useful, but it has to serve the purpose of the customer, and tech helps you solve it at a cheaper price. That's where things are.
So in fact, one more angle to the tech stack is also the future, because this tech, as rightly mentioned, one is the distribution part. Yes, we are not yet there in terms of solving completely to the tech, but as much as we are moving towards a completely digital kind of, it's a transition. So in that, there are two things also we should focus on. One is the existing one itself. How can we make one on the efficiency as well as on the product, betterment, innovation part of it, how technology can be enabler, right? From data science to analytics to different products which we can use out of it, because UPI is a great example how it has just, the stack has just taken over. And the second part is the future technologies also. For example, now we are building a cross-border solution on blockchain. So there are and Web3, which is where the newer tech, what world would look like 10 years later, we need to start the technology embedding into the entire thing right now. So which might see the impact in a big way in probably next 3 years, 4 years, 5 years, but it's time for us to just start there. So that is a futuristic part of the technology which has to get embedded into this. And then there is this in between wherein, during the transition time, people who are used to the earlier way of doing things, which is where India would remain digital at least for the next half a decade. And you cannot ensure that tech will solve everything and the distribution can be taken care. So that is where the three aspects of it is through where technology will keep maturing and the distribution also will keep maturing. One from the as we create more and more micro habits also, and then switch to technology. But yes, digital is something I completely agree cannot ignore for some time.
The way I see this is like a train, right? Like there would be some people who are in the middle right now. Some percentage of that will move to the the upper end and like completely as their income levels and those, right? And then there is a much poorer half of the India, and some of them which don't even have the money will first go through this transition of digital, and eventually maybe so rather than maybe a half a decade thing, this might be, let's say, next 15-20 years kind of a thing. Let's see. Could be longer, much longer, but there is good thing is opportunity is there for everyone, right? Like that's the whole point, right? It's so massive, right? Like it's whether like for the first time actually when I interacted with Chaitra, I realized that there is this women gap also. So there is underserved even in the Gen Z millennials, right?
That's
and
right.
What Deepak is doing or I am doing, and of course Open is doing, right? So there are pockets of underserved everywhere, and each one of us and many of our fellow entrepreneurs can build very, very large companies.
That's the dream. We've got a few questions about adjacent sectors. So I'll bring it all into one. How can fintech platforms impact and help grow other adjacent sectors like maybe retail, education, and so on?
So one thought is that this is definitely going to be fintech and business shouldn't be segregated, or rather, the businesses enabler. There are so many areas wherein brands and non-fintechs can also also have great business models from it. One from a revenue stream, and second also from a customer experience perspective, because all of this has to be completely embedded into the workflows, which is where, think of a retail where, if you have a solution of, you can actually, even a smallish company, you can just go ahead and issue a reward point card, not only a reward point, but something which can be like used as a BNPL on your terminal, I mean, sales terminal at any point in time. In the normal case, in the earlier times, you don't even think of it because you can't have that. You're not in the core business of just issuing cards or, giving them, due to which you just give them a loyalty program or a number-based system. But think of a case wherein you can periodically roll out offers, periodically roll out it, like, later. I mean, most of the places you see that credit not available in retail, for example. But think of a place wherein a regular customer, you're able to give them a card and ask them to just use it, end of the month, they pay it up. So that is a possibility today with an embedded finance part of it. And retail can think of it. Not only it's a revenue stream, but a great way in which you can attract and keep your customers. I mean, bring loyalty. There are multiple ways in which you can do it. Recently, we in fact had a very interesting case of a travel blogger issuing a Forex card to all the subscribers. We wouldn't have even thought of, that is a quick revenue stream for that matter, right? Or even for that matter, giving a great experience to the subscribers, a co-branded kind of one. So these are the areas wherein every sector should now start thinking of, I have a pool of customers. How do I better service them? How do I give them a better experience? At the same time, how do I give them, relevant points where if you are owning some portion of their share of wallet, how am I going to ease their experience, or rather, delight them with putting it together? So that is something which we will see that convergence happening to quite a bit right now.
Wonderful. Thanks, Deena. Chaitra, Vishal, any closing thoughts? Deepak had to drop off.
Yeah, I also need to drop off. I just have a meeting, but it's such a pleasure always.
Thanks, Vishal.
Enjoy this panel, and I learn new things every time I join these panels. So thank you so much.
Great to have you, Vishal. Thanks. Chaitra, thank you so much. Thank you so much, Deena. Audience, you all have been wonderful. We couldn't get to all the questions. We ran out of time, but I hope you all had a very informative session. And thank you. Good evening.
Thank you.
Thank you.
Bye-bye.
Bye.